Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for the 9th of September here in 2021. And we're having contract rollover, which for the futures traders will affect us into Friday into next week. So be sure to make that change on the short-term opportunities for futures and, of course, options on futures as well. That being said, let's look at the market on the pullback. We are getting that pullback or retracement, rubber band snapback, whatever term you want to use. It is occurring from the overbought back to the low. Remember that trends, when they occur, don't necessarily go straight up. In fact, they rarely go straight up. They rarely go straight down. They tend to wave, swing, wiggle, squiggle, swing up, swing down, go up, go down. And these create opportunities for trades, but also how to manage risk. So when the market is overbought, is above these averages, or is gone up above standard deviation bands or all sorts of measures, the next move of the market does favor a pullback. And that's where we are. That's where we've been. And despite last week's bullish holiday drift, we are getting that sell side activity very similar to prior times in 2021, but also earlier into 2020. That's, of course, in the S&P. That's your ES futures. On the SPX, we take the volume off and just look at that pullback. So we won't count them all, but that's an example, and they get a little bit smaller, narrower as June, July, August into September takes place. And that's just where we are on the pullback. Where might it stop? Good target would be the prior lows or the prior logic, which takes us back to the blue line, and that happens to be the 50-day exponential moving average. Nothing special about that. It just is a indicator or a tool to guide our thoughts, guide the trades in the short term. Other concepts would play in, and other levels would play in as well. Let's update the Nasdaq. In terms of the S&P pullbacks, which were a little smaller, the Nasdaq in 2021 has had bigger pullbacks, bigger retracements. And that's where we are at the moment, overbought, overextended, and pulling back from the Nasdaq's roughly 15,700 level. Its target would be about the 15,400, and a deeper pullback takes us just about 15,100. On the Dow mini futures, we are going more sideways than up. And we can see that because the market has stalled and consolidated, roughly speaking, into this 35,000, 3 or 4 or 4 or 500 key inflection point. But it is and remains the Russell Index, which is the RTY futures contract, and the IWM, which is our tradable ETF. That is sideways. That has a distinct and clear lower boundary to be considered oversold or a buy opportunity, just played out according to those bounce levels, roughly about 210 or 211 per share. We also have 232, 233, and up to 235 as the upper resistance point. 230 was as far as the market could go on this September swing or late August rally. And that is played to the downside and taking profits into those targets. While we're here, crude oil did peak and has traded down really from June and July against the 75 per barrel level. And that is again taking us on a, now we can call this a downtrend. Lower low, lower high, lower low, lower high. And that is putting in a top or a reversal point ahead of a potential reversal point in the S&P or the broader market. Gold still trades in a sideways range. Not a lot to say about gold, at least from my perspective, in that it is consolidating, forming triangles, but there's not a lot of opportunities when the market compresses or goes into range contraction. We prefer the range expansion or the breakout trades. And finally, we had a big move, and this set the stage for the afternoon pullback. Take a moment, if you will, to study, and I'll show this, how to put two markets together. Let's put the S&P, SPY at the top. This actually is a comparison tool, and we'll take that comparison tool and make that, we'll make it the TLT. That's the bond market. And this is on an intraday chart. So at the top is the SPY, bottom, or the lower panel, is the bond market. One thing we look for is a negative correlation. So stocks tend to rally, bonds, which are more defensive, tend to fall, and when bonds tend to rally, stocks tend to fall. And there was a special moment I wanted to highlight. I was actually on the broadcast when this happened, and it's this here. This is the bond market, TLT, on a 1-minute chart. And we had some surge buying, some rapid risk pricing into the bond market when the stock market was just going sideways. But that set the stage that something wasn't right. Risk was on. Defense was the name of the game. Shortly after, it was about a 10-minute window of the bond market surging that the S&P seemed like all was well, but that wasn't the case. So the bond market led, very, very short term, that rapid sell-off in the equity market. You can see how that played out in the intraday trade. Back to the bigger picture. The bond market is on a bounce. It's consolidating, and it is uptrending. So that is something to keep watching for further additional upside action. In the TLT, that would be the same for ZB, which is the bond market. That's the 30-year bond. And ZN. ZN is a 10-year Treasury note. And these are on the move and on our focus list. But in today's session, it was an earnings play. It had a few earnings plays, but none more interesting or impulsive, gapping, bullish, at least in the morning session, as LULU. So that's just a stock that played continued uptrend, had resistance, but earnings are always that surprise that can lift the market, boost the market beyond its expected move or standard deviation. It can boost it up, it can crash it back down. So earnings are plays, but they aren't necessarily tied to the fundamentals or the chart. It's just almost a random event. Sometimes even if you knew what the earnings were going to be, you might get the direction wrong. But if you are interested in trading earnings type trades, we have classes on earnings butterflies or different strategies such as those. But if you are wanting to look deeper into what earnings are, what the expectations, that would be under the Analyze tab. You can always go inside here and see, well, Lululemon was actually in line with estimates, but that sent the stock higher. It can be what they say and their guidance, which can send markets higher or lower. That was the case in Amazon, which had beat its expectations, but the stock pulled off 3 standard deviations to the downside. You can always check that as well. There's the beat, but of course the stock fell from its rally highs. We'll take a look quickly at that. And there's the earnings, and oh no. And that was a bigger than expected move. Lulu had the same outcome, but in the opposite direction. And so we want to update Don's comment from last night in terms of intraday charts. It might not look too easy to spot on this indicator filled chart, so we'll take everything off, and this will be our overnight chart. So how to get the overnight sessions. He was discussing a key inflection low, targeting a low in last night's video, and just I want to take a quick moment to update. That is what happened. So that is a key inflection that Don had highlighted. Roughly, I believe, was about the 44.86, 44.87 level. Now that took place overnight, and that was an inflection low on the European Central Bank and their taper news. And some other news came out about the U.S. Central Bank and other factors globally. Nonetheless, the news sent the market up. That was confusing. Why would the market rally on a European Central Bank announcement that they're going to taper their asset purchases or bond purchases? Well, the market actually came back to the low, and that is where the market has ended, at least after hours at the time of this video, which is the level Don gave us from yesterday's TheoTrade update. That's where we're going to end tonight's video, and we'll start Friday's session. As always, be careful and safe. This is Corey Rosen with tonight's Theo video update for September 9th, 2021.